Hello from Premia Global Advisors from Coral Gables, Florida. We're wrapping up a surprisingly positive first half of this year. Surprising because as many firms began to forecast this year at the end of last year, the outlook was much more muted. Many forecasters were thinking in terms of weakness in the economy and an accommodating Fed which was expected to lower rates as early as March of this year. History turned out to be quite different. The economy continued to show signs of growth above expectations. Earnings came in strong during the first quarter and appears strong as the initial numbers of the second quarter begin to come out. Inflation was a bit more stubborn, and the Fed had to announce that it was becoming more data dependent. This is how the Fed speaks for when it thinks that things are different than what they expected. U.S. equity indices did well, especially if your benchmark was the S&P 500. Digging deeper into how companies in general fared, we find that not all companies in the index did as well as the index would have led you to believe. The top 10 companies by size represented over 35% of the behavior of the market, thereby leaving another 490 companies not performing as well. More diversified portfolios and more actively managed portfolios tended to underperform the S&P 500 due to their inability to concentrate their holdings in such a small number of companies. This is a very important point because one of the foundations of our investment process is that diversification is key to managing risk. It's very important to keep this firmly in mind and apply it to the construction of portfolios. We always take these chats as opportunities to reiterate our belief that as important as the performance of your portfolio is, it's more important to make sure that your investments reflect your goals and needs, that it be managed with an eye towards minimizing risk where appropriate. At Premia Global Advisors, we do this by staying up to date with research and the opinions of some of the best minds. For example, we're using the market behavior for the first 6 months of the year to rebalance portfolios. We actively use alternative or private funds to seek opportunities that are not existent in the traditional portfolios. And most importantly, we do this aligned with the individual needs of each of our clients. If you'd like to learn more about how we can provide our experience and accessibility to top investment ideas, please give me a call or email me at the address on the screen. Thank you for your time and attention, and wishing you a wonderful rest of the year.